There are 5 steps to shorting a stock and making money, and I'm going to go through them all in this video with you, starting with step number 1, finding the right technical setup. We are using 2 different platforms to get this done today: Interactive Brokers to execute the trade, and our trusted trading pal TradingView to actually do the technical analysis, which is the first part of this setup. You have to know the chart and what you're looking at in order to find a short stock sale. You want the stock to be going down. If it goes up, you lose money. If it goes down, you make money. So here are a couple setups to help you guide you in this endeavor. Right now, we're looking at this stock, Halozyme Therapeutics. We've got a bearish engulfing candle right here. A bearish engulfing candle is just one candlestick that eats the other one. If it was just a little bit higher, it would be perfect, but this is a pretty bearish candle right here. It is enveloping or biting off the entire upwards candle from the day before and moving down lower. That's a very good bearish signal. If you want to short, that means you're getting paid if it continues. The next one would be a falling star, or this kind of tail that you see up here. It's when the price gets pushed up and then the sellers step in and drive the price back down, which leads to a red candle with this upper wick. It's happened once here. It's happened once here again. It's thinking about a star going up and up and up, losing momentum, and then slowly coming crashing down to earth is what we're kind of seeing right here for the setup. So that's an option number 2. Option number 3 is what's known as the 3 black crows. And it's 3 consecutive red candlesticks or black candlesticks, depending on the type of chart you use, where it's negative, 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 full long body candlesticks, which just continue. And that trend is just saying there's a lot of selling action in the market, no real buyers stepping in yet. And this trend usually continues for a couple of days after, 1 or 2 days. And then the buyers usually step in and pop it up a little bit because it becomes too good of a deal. But in this kind of 1, 2, 3, you can expect more downward pressure to follow. But let's say in our example here today, we like to set up on Halozyme Therapeutics. We like the engulfing candle for our purposes. This brings us on to step number 2. We've identified number 1, which stock we want to short. Now we have to set a profit and a stop loss to make sure that we, number 1, lock in our gains. And number 2, don't get burned if this stock decides to pop off or there's some crazy news in the market that send it to the moon. Because remember, when you make a trade as a short seller, your losses are potentially unlimited. If the stock just keeps going up and up and up, that's what a short squeeze is. So we have to set some stop losses and profit takers. And to see a video on that, check out this next card right here that I did recently about how to do that, Interactive Brokers. We're going to do it again today real quickly, but to get a full in-depth look at how you do that, check that out right there. So for here, we have to zoom out a little bit to set our profit and loss area. So first off, we're going to set our profit targets. And the ultimate one right there is if we drop past this 20-day moving average, we're going to come down here and hit this 3288 level, which also lines up really nicely with some of these other kind of points over here from back in January, February, even November of 2021. Okay, it's been tapping around this area for a lot. And a secondary profit, or the first kind of line you're going to want to punch through, is going to be right around this area. You can think about taking some profit right around there. Again, this isn't a straight up has to be done at this level, but that's the kind of the guiding area where you want to set your profit taker, 33.87 or 32.88, but $1 difference. Now for the upside, you want to be able to risk less than what your potential gain is. What I mean by that is if you're going to risk $1, you should make $2 in profit minimum. So right here from 36.90 to 33.80, let's call that $3 of profit. We don't want to risk more than $1.50 change when we're doing this kind of trade. So our stop loss up here, if I'm looking at the chart right here, I'm okay with going $1, right? You don't want to go more than $1.50. If we go up to 37.90, we're right there. A little bit higher, let's go up to 38.20, which will take us to the top of this red candlestick right here. Let's make this a blue line. And that's our stop loss right here. Remember, we're betting the stock's going to go down. So we want it to come down and hit these areas down here. That's okay. If it goes up here, we're losing money. That's a bad thing, but that's why we have a stop loss up here just in case at 38.20. Now we have to go into Interactive Brokers and actually make this thing happen and make sure that we have the right account sizing. If we're trading 10,000 bucks, you want to put 10,000 bucks on the line. You want to have some proper risk management. This is how we do that. We hop all over into Interactive Brokers. We click on Halo here from our little portfolio of things we want to buy or sell on. We click sell, and here's where you look at your account. If you have $10,000 in your account, you want to trade maybe 1% up to 5% of your account size. That 5% would be really aggressive for a single trade. So let's say it's 2%. And in that case, you want to trade only 200 bucks per trade. But in this account, it's a fake money account. Let's say there's 100,000 bucks in this account. So again, we only want to trade about 20,000 bucks of our money to be able to do this. You want to scale it up and do that. So if I have a amount here of 36.90, we want to put in a mid order quantity of 100, and we're going to open this up. We're going to attach a stop loss and a profit taker like we talked about, just going back to this real quick to see where they're at. We want the profit to be at, let's go 32.88 and 38.20. So we're going to flip some numbers around here. The profit taker is going to be lower because we're going down, 32.88. And the stop loss is going to be at 38.20. Just make sure that's right. Again, go back in. Right on. We are good to go. Okay, and this again, this is protecting our downside and protecting our upside, locking in some gains, so we don't have to make any emotional decisions when we enter this trade. It is locked in, and we are good to go. Okay, we're gonna close this down. It's in there. It's good. We're in for a day. We're gonna go, yeah, day. That's fine. Let's open up the advanced tab one more time. Just confirm everything's still there. We're going to change these to good till cancel, that they stay intact past today. They're going to stay intact until they're executed, but we're going to do that. And then we're going to go ahead and hit submit. And we're going to override and transmit this. And now our orders are in here. We have ordered and shorted 100 shares of Halo. We are in the game. Next thing we do is execute and just kind of sit back and wait for it to happen and monitor. And we can do that in a number of ways. We can set alerts within Interactive Brokers. We can set alerts within TradingView, or you can just wait for the trades to work themselves out and see which ones get hit first. If it goes up, you're going to hit your stop loss and lose a little bit of money. If it goes down and hits your profit target, you can go then, it's going to automatically take profit for you as well. So you can really just sit back and relax and see how the trade works out. But after the trade is finalized, if you close it out early, if you decide to go and let this kind of work itself out, make sure you go back and see what happened, why it happened, check the news, check the company profile, check what's going on with the company and why the stock price may be moving a certain direction. Maybe the market's picking it up. Maybe the sector's picking it up. Go back and understand that this trade isn't just a one-time deal. You always learn from the trade that you make, and you learn from the ones that you don't make. So make sure you go back and check why it happened, why it moved, document a little bit in a trading journal, and get better, learn for next time. Thanks for watching the video so much. Andrew Ferguson here. Subscribe to the channel if you got some value today, and I will catch you guys on the next one.